The Eurozone service sector shrank unexpectedly this month, reviving fears of a recession for the region. Markets Eurozone Services Purchasing Managers Index fell to 49.4 in February compared to 50.4 in January. Eurozone's manufacturing fared a little better, but enough to cheer markets. So the big question we're asking, will the Eurozone slip into a recession, and is there a way out? To discuss this, we're joined by Peter Chartwell, Senior Forex Strategist at Credit Agricole CIB. Peter joins us live from London. Peter, thanks for joining us right here on Global Business Report. Clear Eurozone service sector shrank this month, reviving fears of a recession. What are the chances of the Eurozone falling back into a slight recession, or is the Eurozone already there?
What poses a risk to us still is the same conundrum, really. The banking sector is under a lot of pressure. So right now, balance sheets are still under pressure. Many banks are still cutting them. So offsetting that is the ECB's LTRO, or attempting to offset that. But still, it's not an opportune time for the banking sector to be restrained with regards to capital, because what policymakers really want to see is the monetary transmission mechanisms acting well, and the the money multipliers to be functioning as well as they would normally be. I think so there's some doubts in my mind as to whether that's actually the case.
Peter, unemployment is clearly the other big concern for the region, and given the fact that there's this whole austerity drive in place across the region, how do you think the region will combat joblessness?
Short answer, I don't think we're going to see anything yet. Right now, I think it's clear that there's still much focus on the debt side of things and spending, and really we need to see a bigger review, more structural review, as to how we can try to eliminate joblessness and work on some growth reforms. But I think that's down the line. So with regards to pricing in that improvement, I think we're a bit premature.
Peter, let's talk about Greece then. The Greek bailout deal seems to have done little to cheer the market. What's behind this pessimism?
The target is for approximately a debt-to-GDP ratio of 120% by 2020. That's by no means an odds-on certainty. I think there are significant risks to the upside on that with regards to their debt-to-GDP ratio. So that's the first thing. And the second thing is that the PSI, now that we're seeing some details on it, it's far from certain whether or not we'll get the required take-up of that. And if we don't get the required take-up, then that poses the problem of turning this engineering a mandatory restructuring.
Greece must complete its bond swap by the 10th of March. That's the new deadline. Do you see this happening smoothly, or are we in for more shocks?
I think it would be similar to the previous attempt at PSI, in that if there is any acceptance, you'd get an initial rush from say banks and insurers who are under the IIF umbrella. But from then on, I don't really see what the incentive would be to accept. So I think it would be slow to actually build a critical mass here. So I'd expect this to actually be quite drawn out, and so I think we'll be waiting to see what progress has been made right up until the deadline.
Greece aside, Peter, many believe that Spain may be the real elephant in the room. The Spanish government is going to ask for an easier deficit target for this year. How are you reading all these developments?
For the moment, I don't see much of a problem here. Really, the biggest factor of all is the amount of excess liquidity that's in the system, and in particular the fact that the ECB, thanks to its LTROs, has secured the banking system within Europe. It's offered term funding. So even if there are more problems for peripheral sovereigns, I don't think that would have any kind of systemic impact. So I think we're much better equipped to cope with any further problems that there may be on the peripheral debt side and I think we could be able to deal with them in a more calm manner.
Peter Chatwell, thank you for joining us with that perspective live from London.